in bringing to bear for us to drive sales and the effectiveness of sales in the overall performance of this organization. The truth is that without sales, there will not be anything like Powell. And there was something else that he mentioned about development that also struck me. And when I happened to have a conversation with the GMD, he also pointed out that you guys are not doing anything in the area of finance, but it has become something you have to do with at this moment. So let me tell you the truth. Most developers I know have happened to come across with both within the trade and outside the country have done remarkably well on their own, but have done exceptionally well when you engage a financial institution. The financial institution could be a bank, it could be a registered discount house, it could be anything. The role is to help you speed up savings. Who has 20 million in his savings may take him 2-3 years to pay down that for that property. But if you come to us, we create a mortgage for that transaction in 1 month. If it's our own natural product, if in 1 month or 2 months, we've exited that sale, you've earned your commission, right? The burden of repayment now falls on the bank. Do you understand? So it is essential you learn about it. So the NHF is at 6%. I will run you through the pictures. It's 6% per annum, and 6% per annum, and it's structured to last for 30 years. So what it means is that if you are less than 60 years, because the natural retirement time is 60 years for any civil servant, is 60 years. So if you are less than 30 years, or you got employed at the age of 30, you have 30 years to pay the loan. So if you are above 30, let's say you are 35, you have 25 years to repay the loan. So you are less than 30, you also have 30 years to pay the loan. So it depends on your age. So the title must be registrable. So it mustn't be a CFO for the FMBN to deal, right? But it must be a registrable instrument, a registrable title that we can go to the land registry in Enugu, or we can go to the land registry in Anambra, and anywhere to say we want to register this title, and they will accept it from us and register it. So it has to be a registrable title. That is the second condition. The third condition is that the person, I've mentioned the other one, that he must contribute for 6 months, right? The person must provide us with 3 months pay slip and 6 months statement of account, right? The other one is that they must possess a tax clearance. Now, for the people in government sector, they don't need it because their taxes are taken up front from there without recourse to them. So, but for the people that are in informal sector, let's say a trader can also access NHF, right? You mustn't be a civil servant. So, but what him is that he must be registered and contribute for a period of 6 months, right? For him to become eligible to access that mortgage. So, because the truth is that we have a good number of Nigerians that are not in structured or organized private sector. And we cannot say because they are not in organized private sector, they're not making money. They are even making money than the civil servant. If you see a businessman that makes more money than the civil servant, who earns about 300 to 500 or 600,000 every month, right? So we want to also get them involved, right? So we want to make them participants of this mortgage scheme. Have I mentioned tax clearance? Okay. Then lastly is a valid identity card and passport photographs. Then a formal application requesting for the loan. Now, Federal Mortgage Bank, the NHF loan is not in 1 month or 2 months time, right? Because we are not in control of that. But what we can assure you is that once the customer or your customer has provided all the necessary documentations, in 1 week we will process and package to FMBN. Sometimes it takes as much as 6 months. But with the advent of MRIF, they have improved because we no longer take mortgages as we used to do to Federal Mortgage Bank. We now decided to direct them to MRIF because MRIF is what is faster, right? And now because of that, they've seen that they're not getting new applications. They've tried to speed up their process. So we've gotten in 4 months time, but the most fastest one is the MRIF. So let me go to the MRIF. What do you say? Yes, the MRIF, yes, is MOFI, Ministry of Finance Incorporated. That's the M, Real Estate Investment Fund. So MRIF is a 1 trillion naira jointly done between the commercial banks in Nigeria and the federal government. So the commercial banks in Nigeria contributed a particular portion to come up with 500 billion, and then the federal government came up with the extra 500 billion to make it a 1 trillion trust, where individuals like Nigerians like me, you and I can apply for the mortgages and access towards only housing acquisition. We don't finance land. Sorry, MIF does not finance land acquisition, only property acquisition, like developed property, and they must have to be at least 80% completed and above before they can be able to approve and dispose. Do you understand? So if you want to access MRIF, the property that you want to acquire must be 80% and above in terms of completion. So you cannot bring a house at the level of 50% for MRIF, it wouldn't fly. And that applies also to the NHF. Is the slide up? Okay. I'll run through this and then go to the one that will interest you. So the same conditions that applies to NHF applies to MRIF. There's only 2 things, sorry. One is the interest rate for MRIF is 9.75%. But it's better for me as an individual to apply for a mortgage in 2 months that I have it than to apply for mortgage that will take forever for me to get, and I pay a difference of 2.75% extra than what NHF is going to give me. So that's one of the differences. The second one is the tenure. While NHF lasts up to 30 years, MRIF is only structured for 20 years. Those are the only differences between MRIF and NHF. Then I will come to, but none of them finances housing acquisition. But you can take a construction finance loan. So for a customer who have actually bought a property at Powell, right? And they landed property at Powell, let's say one of your estates, and they want to build, or they want Powell to build for them. What they can do is to approach us to take a construction finance from NHF at the same interest rate. Then when the money comes out, they pay Powell to construct for them, right? And then they start making their repayments. Is it understood? There is a moratorium of 3 months, but for bungalows and even duplexes, once you have the cash to execute the project, it doesn't take more than 6 months. So, but we give a moratorium of 3 months for the construction to happen before you start making payments. Is that clear? If you need to ask questions while I speak, you can do that too. Okay, when I'm through, you're noting your questions. Okay. So, the one that interests you is this one. This product I was to speak on. It's not been established, but I'm actually the one that is working on it in my organization. Why did I come up with it? As a management meeting, I saw that there is need. A lot of developers do land banking and land sales, service plots, especially in this part of the country, right? And we are not tapping into it. People will have to. There was a time I was talking to your guy and some other people, and they told me, yes, they also give their clients installment payment plans to pay over 6 months, 1 year as a premium, right? And I said, why can't we take that burden off you? Because while you are selling your land, you may also have opportunities to acquire another one. So if you don't have the necessary capital, the required capital to acquire that one, at by the time, because you know what you are selling now is just like going to camp to buy spare parts, to buy, let's say your hub failed and you want to go and buy hub. The man that is selling the hub has like 3 or 4 hubs there, that when he sells one, by the time he's selling the second one, he's ordering again from Lagos or anywhere else on it, right? But your property, your tier is not hub, is land. So if you are selling the one that you have and you're not acquiring another one, you're making a business failure. They call it, remember, there's a call it, the way we call it in finance, but it's my mind. I'll remember it while I speak. So you need to. So what I came out from, okay, let's take this burden off from these developers. that are selling this service plot. Let's lend great mortgages for 1 year, 2 years, because they are lands, short term, 1 year, 2 years mortgages for them to buy lands. Now, initially, banks don't buy lands. Do you know why that banks don't land acquisition? It's just one issue, because you may go to the land registry, right? As collateral, when we want to take a collateral, we take landed properties, right? But we don't take undeveloped lands. We take lands that are built, because if you go to the land registry, you can see Mr. Onyeka as the owner, for example, right? And somebody may carry the title and say, I am Mr. Onyeka, right? You don't know if it's Mr. Onyeka or not. When you now sell to him, when you now buy from him, the real Onyeka will now come out and tell you. But when a property may be in dispute, there may not be a charge that is registered in the land registry. It may be in dispute, but when you now want to finance the land and you want to commence development, a lot of people will come out to tell you this is our land, or you've not paid this, or you've not paid that. So that bank doesn't want to associate themselves with that. But we've put some remedies into place to address those concerns and those risks, which I will not bore you with. So now we come up with a work in progress, but by the end of July, that product will be fully approved by our board and the CBN. Because once it's approved by our board, we take it to CBN for approval. Then we'll let you know. So your customers who want to buy lands can come to us. But I will run you through some features of the product. But you know, they are prone to subject to amendment by the central bank and also by our board. But at this level, we are giving it at 35% per annum. It's not a lot, though. Don't think it's a lot. Who thinks it's 35% per annum is a lot now? You think so? Why? Tell me why you think so.
You say what you are giving to Powell, facility you are giving to Powell, or what you would sell to the customer?
No, I'm not giving Powell a facility now. So you have a customer, Mr. Ebuka or Mrs. Victoria, that wants to buy a property from Powell, right? The cash flow can only support that for a period of 24 months. Powell, do you have that patience? He doesn't have that patience, but as lender, I have that patience to take on that transaction for 24 months. So I say, come to us of 35%, but it's based on reducing balance. So if you have paid a principal of, let's say you took 30 million AG Mortgage Bank, right, to acquire that property. If you have paid 1 naira, we will not charge you on the 1 naira that you have paid. We only charge you on the one that is left unpaid. And let me tell you why 35% is not much. If you are a financial analyst and you follow what's happening in the financial sector, you know that today the MPR is 27.8%. That is what the CBN, which is the Apex Bank in Nigeria, lends to banks, is 27.8%. And then if you consider inflation, right, and everything, which is inflation, core inflation now is over 35%. Core inflation in Nigeria, 35%. So if you consider only part of the transaction, you know that 35% is not much, because money loses its value every day. So 35% is what most banks are lending now in Nigeria. Do you understand? So we are giving at 35%, and it is for a maximum period of 2 years, only for the land acquisition. So for that, your customer that thinks that I cannot buy that cash of 20 million naira to buy, or 15 million naira to buy a plot at Evangelist State, right? You can tell the person, madam, you can take a mortgage. Even in the diaspora, we can lend to people in the diaspora. So not only those people in Enugu or Lagos or Abuja, we can also lend to people in the diaspora. You tell the person in the diaspora, because they also receive structured salary over there. So if he doesn't have savings, you will not expect him to bring out the entire money and pay you. We also lend to them. So for those in the diaspora, you can also tell them we can create a mortgage. We have a financial institution that can lend you to acquire this land for 24 months. The good thing for you now is that you earn your full commission, Abi. Or do you pay them as they pay? If you pay 100% when they pay 50%? Okay, but let's say the land is sold for 10 million. If it brings 2 million, what percentage do you pay them? Oh, it's complete. You see? Yeah.
Sometimes people get into transactions by faith. It happens all the time. When they get into such transactions, they are hoping that somewhere along the line they'll be able to meet up. Then if you've paid commission to a realtor, many times they come back telling you that unfortunately they are unable to meet up. Maybe after 6 months, you've given grace and all that. So you will not be forced to return
the money. Well, as you have parted with completely. Okay, let me bring some advice into this. Maybe you can consider it as the CEO. Some developers, what they do is when you do commission on the equity, but it is subject to a clause that they must sign. So if you are paying 5% to if you are paying 10% to your developers, the client will sign that they will part away with 15% of what they have paid if they seek refund. But you're not going to pay them 10% immediately. You pay them, instead of 10%, you will not pay them 5%. So when the transaction completes, you will now pay the balance of 5%. In the event that the customer says, refund me back my money, you will take out the 15% because the customer has signed it in their offer, right? Accepted it, and then you do. Just an advice it's on your governance. Your corporate governance is different from other people's corporate governance. You may not want to subject, because that you mentioned about culture, right? So your culture of the organization, that's your governance, may be different from other people's, because you may think on a moral justification, you may think that, no, why do I have to take 15% from someone who have given me money? I'm further subjecting that person to losing value instead of getting value. There are two ways to approach it, but it depends on what your governance is. So I think I've run through the products here. Can I scroll down, please? No, the project is for the land. It's called it doesn't have there's something we've called it, but like I told you, it is still subject to change by our board and by the CBN. So we will not want to tell you now until it's entirely approved from the CBN. Then we can tell you for a fact that this is the name of the product. So, but I'd like you to go down to see if there are anything I've not touched. Okay, here? Okay. So I've told you about MGMB. We are 22 years now in operations. Yeah, licensed by the CBN. We're in Enugu, Abuja, Surulere, Festac, Ikeja. This is an old slide. We're also in Aba. We are in Port Harcourt. We are in Uyo. We are coming up in Uwe. So this is not for you, but for this is for you. We have spoken about this. This is for the company. If you want to take a real estate construction finance, you can come to us. It's still at 35%. It's structured for a maximum tenure of 3 years. And you can pay annually because it's a construction finance. You can pay biannually, you can pay quarterly, depending on your cash flow. You want to align it with your cash flow so you don't have to default. Because when you default, it attracts penal charges. Financial advisory services. So if you have concerns about if you want to structure your finances to meet international standards, we also offer that service. Deposit, so we deposit like every other bank that you know, savings, time, and term deposits. I've gone through this. A mortgage is structured long-term loan design. I can also send you this slide to study on your own. So I've mentioned the mortgages that concerns you. You have the residential mortgage for the properties that you have developed. We have the on-lending, which are the NHF and the MRF loans. We have the commercial mortgages. The commercial mortgages are, I don't know if your company intends to venture into shop development, but if you have that in mind, we'll advance commercial mortgages for people that want to acquire shops and every other commercial properties. Some people build plazas, malls, and sell them. So for those kind of people, what we give to them are commercial mortgages. So we have micro mortgages that we give to traders, petty traders. They are not collateralized, but we take comfort by way of checking. So you give us a check and we can criminalize that check in event of crystallization. When I mean crystallization, if the person fails to meet their obligations, the bank can throw in the checks and then recover their money, report them to law enforcement, EFCC, ICPC, as the case may be, and recover our money. Construction and renovation loan. So for your customers who have bought your estates and they want to renovate their houses, they can take renovation loans to do that.
All these ones are still up to 5%.
Yes. You want it cheaper? So these are commercial mortgages like I've explained in a nutshell. The on-lending, I've explained it. The National Housing Fund, the Family Homes Fund, the MRIF. I've also explained the requirements for obtaining a mortgage loan. Like I've told you before, these are all here. I will send the slides to you. So these are this is the page that speaks to the interest rate. I told you it was an old slide. It's now 35%. So we take 1% fee flat, perfection fee, then mortgage possession insurance. Why do we take insurance? It's because I had my career in Abuja, and I have seen an event where someone took a mortgage. The house was gutted by fire, completely gutted by fire. Both the household, furniture, everything. And you know what? Because the mortgage is running, and you cannot tell someone who has lost his house, property, cannot continue to pay mortgage. So we take insurance. In event of fire, natural, any disaster, the insurance company carries the burden of making sure that your house comes back to life, one, and then you can start paying your mortgage. For example, also when you lose your job, let's say civil servants are not used to losing their jobs, but let's say bankers, other organized private sector, you can lose your job because the company is not doing well or many other reasons, right? For that reason, we say the company will pay that loan for 6 months. In 6 months, you are expected to have gotten another job, right? Somewhere. And then you start paying your loan. But they will take that burden for 6 months. In event of death, I've also seen that one, they completely pay down the loan. So your family won't have to carry that burden. The insurance company pays down the loan, and that one is off the neck of your family. Who is eligible? I said business, I've said it before, the informal sector, the individual business owners, married couples, customers with no adverse credit history. So if you have a bad credit history, for example, you've taken loans in the past and you've not met your obligation as and when due, will make you to, even if you have to do it, you must clear that loan before you come here. On most times we decline the transaction because we don't want to have similar experience. Property to be purchased must be registrable and transferable. I've mentioned it. There must be it must be a registrable title, right? That we can go to the land registry to perfect. So the debt to income ratio, the DTI, must not exceed 3.3%. I mentioned it before. So there's a labor law in Nigeria that is effective that says that you cannot use more than 1/3, which is 3.3% of your income, your composite income, to pay any loan in Nigeria. If it exceeds that 3.3%, we will decline it. I've spoken to the duration of processing the mortgage. I will not bore you with these ones. Do I still have more time? So, with step-by-step approach. So when you come to AG Mortgage Bank, you open an account, just like the way you open with any other company. You complete a mortgage application form, endorse pay slip. You must give us the pay slip. I mentioned it before, at least 3 months, 3 current months. Then there must be an offer letter. When you sell to your customers, you give them offer letter, right? You must have that offer and acceptance by that same customer. And there must also be an evidence of payment, financial commitment, because we don't want a situation whereby the person has not made financial commitment and will finance 100%. The issue is that the person may, just like he said before, may abandon that project, right? But if he has made a financial commitment, he knows that if he abandons it, that he's going to lose the one that he has committed. He will be forced to continue the project. So I've done this. That's evidence of, I've spoke to this. So we have to do a title search. We have to confirm the title of the property, availability of the property, confirmation of the availability of the property, to ensure that it is not encumbered. So these ones are the ones that we ask the developer to bring, not the customer. The customer will bring the pay slip and all of those, the letter of employment and all those. The developer will give us a copy of the title. In the case that is an estate, because estate usually has one title, you give us a copy of it, then approved building plan, provisional allocation letter from the estate developer, the copy of the registered deed or registered power of attorney, letter of undertaking that the houses are on ground from the developer. What are the common challenges that people face in taking mortgages? in high interest rates you mentioned, but like I said, the government has identified that there is significant housing deficits in Nigeria. As of today, we have over 25%, 25 million houses in deficit. So they said, okay, let's come together and establish these alternative routes to mortgage acquisition. So you have the MREF, you have the Family Homes Fund, you have the MREF. Those are all below 10% interest rate. So if you can't take our own, you can also take those other ones. Just that it may take some time, but our own is faster. And you can also take our own and refinance it with the other 6%. So let's say you are selling a property and it's going, like there's no patience to wait for the person for 6 months or 5 months. You can take our own, especially for those in diaspora. We have witnessed it. They take our own, then when they apply for Family Homes Fund or NHF, they refinance it with those ones and then continue your repayments. Low purchasing power, I've mentioned it when I started this conversation, that a lot of people now in Nigeria cannot really afford the purchasing power is eroding day by day. So if you are thinking of, okay, let me start my real estate journey when the economy gets better, you may be 70 by then, right? Or it may never happen. So you start, the time is to start now. Start with what you can afford, and then you can take a mortgage which can stretch. I also have a mortgage that I'm paying. Do you understand? If I have waited till when everything is good, I may not have that mortgage. And today, let me tell you, today that property is worth 10 times what I acquired it before. So those are the selling points. You also need to tell your customer to start now and enjoy the appreciation later in future. So shallow understanding of how mortgage works. So people don't know how mortgage works. I'm sure that there are some of us here that have never heard of mortgage before, or don't even know that it works before, that it works in Nigeria. Maybe you think it works outside the country, yes, America, UK, and the world, but you don't know how it works. Some people think that it doesn't work, but it works. We've just between last year and this year, we've created over 2,000 mortgages nationwide. So it really works, and we want more. Low income earning. So people don't really earn much to take mortgages. Some misconceptions. Little or no belief in mortgage assistance in Nigeria. I mentioned it. It works. So people think mortgage doesn't work. Those are the way people think insurance doesn't work. Insurance works. My vehicles have gotten hit by people, and in 1 week I have been paid by insurance companies to fix them. Sorry, I didn't get that. Are you speaking to me? No. Okay. Assessing a mortgage is only for the rich. It's not. Both the rich, the mid, and the poor can take mortgage. So far you earn a living. There are people that bought Goshen about 8 years ago or 9 years ago. They bought it and their repayment is 40,000 naira. And now a 3-bedroom flat, you know what it comes to? It's 480. And they're paying 480 as rent. Imagine you're paying 480 in Enugu as rent in Goshen, in 3-bedroom bungalow. And you know, that's what keeps happening. And the interest rate remains constant throughout that tenure of that facility. It doesn't fluctuate, it doesn't go up. It remains at 6%, at 9%, but whatever it is, it remains constant.
That's a question. Like, if you are to look at these things from the investment point of view, let's say for instance, a client purchases a bungalow worth 50 million naira, then he pays an equity of 30 million naira. Then apply for a mortgage from your bank. Then you can now pay the 20 million naira that is removed. Let's say the mortgage is only for 2 years. Then at the middle of the 1 year, the bungalow now appreciates to 100 million naira. Can he sell off, then balance it up?
Yes, it's his property. The only thing that you're just going on is your property. In fact, I think there was one that happened recently. Somebody bought a property at New Enugu before they tarred that road. When he bought that property, he bought it for 60 million. After they tarred the road, that property is over 200 million naira now. It's still his property. He can decide to sell and pay us that small amount that he's owing us. We don't have any charge over that property unless he doesn't pay us. Then we can realize the property and pay. Even when we realize the property, sell it, pay his loan, the balance will still be in his account. Yes, we don't have any charge, any right to take what 1 naira extra from what is owing us. will be penalized by regulators, which are CBN, NDIC, and why choose AGMB? We have flexible mortgage structures, attractive investment returns when you keep money with us, trusted and regulated institutions, customer-centric support. So we have a 24/7 customer center that if you have any challenge, both on your app or anything, you reach out to that number, we'll address that issue and you'll be fine. So that's what we're trying to speak on the last one. Renters become homeowners. There's no other product that I didn't speak to. You can also do what we call rent to own. It's paid annually. So if your cash flow, people in CBN that work with CBN, they pay them their housing every January. So if you're such a person and you take a mortgage, you know that your monthly income cannot afford it, you go for rent to own. Okay, so that every January you make that payment. It's as if you are paying your rent, but you're also it's your house, but you're paying your rent and you're staying in your house. At the end of the maybe 20 or 30 years, it becomes your own. So instead of paying rent that's for a property that would never become your own to your landlord, you pay become your own. You can do it for any of your products, any of your housing products in Powell, at Powell. Yes, you can. Diasporans, like I mentioned, can own homes. You can finance diasporans to own homes. So if you see someone in the US, UK, Australia, anywhere in the world, once they are able to justify their means of income by way of payslip, we can finance them to acquire those homes in Nigeria. Is that okay?
Yes.
I'll leave it here. I want to take questions.
Question.
No. Okay. Thank you very much. My question is why
Do you know what it comes to? It's 480. And they're paying 480 as rent. Imagine you're paying 480 in Enugu as rent, you go sell a 3-bedroom bungalow. And that's what keeps happening. And the interest rate remains constant throughout that tenure of that facility. It doesn't fluctuate, it doesn't go up. It remains at 6%, at 9%, but whatever it is, it remains constant.
That's a question. Like, if you are looking at these things from the investment point of view, let's say for instance, a client purchases a bungalow worth 50 million naira, then he pays an equity of 30 million naira, then apply for a mortgage from your bank, then you can now pay 20 million naira that is removed. Let's say the mortgage is running for 2 years. Then at the middle of the 1 year, the bungalow now appreciates to 100 million naira. Can he sell off, then balance it up?
Yes, it's his property. The only thing is that you're just owing us, it's your property. In fact, I think there was one that happened recently. Somebody bought a property at New Enugu before they tarred that road. When he bought that property, he bought it for 60 million. After they tarred the road, that property is over 200 million naira now. It's still his property. He can decide to sell and pay us that small amount that he's owing us. We don't have any charge over that property unless he doesn't pay us. Then we can realize the property and pay. Even when we realize the property, sell it, pay his loan, the balance will still be in his account. Yes, we don't have any charge, any right to take what 1 naira extra from what is owing us. We'll be penalized by regulators, which are CBN, NDIC, and why choose AGMB? We have flexible mortgage structures, attractive investment returns when you keep money with us, trusted and regulated institutions, customer-centric support. So we have a 24/7 customer center that if you have any challenge, both on your app or anything, you reach out to that number, we'll address that issue and be fine. So that's what we're trying to speak on the last one. Renters become homeowners. There's no other product that I didn't speak to. You can also do what we call rent to own. It's paid annually. So if your cash flow, people in CBN that work with CBN, they pay them their housing every January. So if you're such a person and you take a mortgage, you know that your monthly income cannot afford it, you go for rent to own. Okay, so that every January you make that payment. It's as if you are paying your rent, but you're also it's your house, but you're paying your rent and you're staying in your house. At the end of the maybe 20 or 30 years, it becomes your own. So instead of paying rent that's for a property that would never become your own to your landlord, you pay become your own. You can do it for any of your products, any of your Powell, at Powell. Yes, you can. Diasporans, like I mentioned, can own homes. You can finance diasporans to own homes. So if you see someone in the US, UK, Australia, anywhere in the world, once they are able to justify their means of income by way of payslip, we can finance them to acquire those homes in Nigeria. Is that okay?
Yes.
I'll leave it here. I want to take questions.